Hello, crypto fans, and we have a good dose of crypto news for you tonight. First of all, Bitcoin is extremely bullish. BlackRock ETFs have reached new heights, and it's inflows, and inflows. BlackRock and Fidelity have had $700 million net positive inflows, overtaking Grayscale. We already knew that last week. But BlackRock has reached the top 0.2% of ETFs, not just the top 1%, but the 0.2% of ETFs. That means they're in the top two of 1,000 ETFs. That is insane. They're like in the same league as the S&P 500 ETFs and those big ETFs that fund retirement funds. So the position of BlackRock's Bitcoin ETF could have been higher had it not missed the first 7 trading days on the NASDAQ while it awaited approval from the SEC. So BlackRock could have potentially been the top out of 1,000 ETFs had it not missed the first 7 trading days. So basically, like BlackRock's iShare exchange traded fund has made it into the top 0.16% of all US issued ETF products. That should show you how hot the demand was for the Bitcoin ETF. This is big news. We have over $3.19 billion in flows. And this is from Eric Balchunas on his Twitter. So Balchunas said, got our first holder reported for IBIT. It's a Canadian asset manager called Redwood. Looks like it sold the local purpose proposed Bitcoin ETF, which is less than 1% fee, and bought the US-based IBIT, which is free for the first 5 billion and 25 BPS thereafter. Great cost migration hitting crypto funds. About IBIT now in the top 5 in year-to-date flows. And remember, we missed like the first 2 weeks, which means it's taken more cash than 99.98% of Bitcoin ETFs. This is incredible for a new ETF. You can see there's a bunch of like retirement funds, and then there's IBIT. It's pretty incredible. Look at this. You look at the average, and you can tell that we're in business right now. IBIT right there, the Bitcoin ETF, like really incredible. Obviously, like some of the S&P 500s are still bigger, but those are like the big retirement pension funds. And Bitcoin's not really allowed to be in those quite yet. So you can tell that there's like huge retail and institutional interest in Bitcoin, much more than regulators have thought, and that must be driving Gary Gensler and Elizabeth Warren crazy. And I like things that drive them insane. So according to data from YCharts, BlackRock flows so far placed in the top 0.16 of ETFs when weighed against the 3,109 ETFs currently trading in the United States. In fact, out of 3,109, it is number 5. That is insane. So Balchunas arrived at a figure of 0.02, a figure that appears to measure BlackRock's ETF against an estimated 10,000 ETFs worldwide, and that basically places it in the top 20 of 10,000. Fidelity is also doing extremely well. It's also at $2.51 billion, which places it 8th among US-based ETF products. And on the chart I just showed you, FBTC is Fidelity. It's at number 8. BlackRock's at number 5. You can tell how big the demand for Bitcoin ETF was among institutional investors, and I don't expect this inflow to actually stop. And BlackRock and Fidelity are continuing to climb the list, and they were both 8th and 10th position at the end of January, and now they're 8th and 5th. Fidelity jumped from 10th to 8th, BlackRock jumped from 8th to 5th. It's noting that while total flows of other ETFs are being counted from January 1st, we didn't start counting until January 11th for the ETFs. So had we actually had all that time, we might actually be like number 3 or number 2. And if you actually look at the charts and the numbers, it's very likely that BlackRock would have actually been number 2. I don't think it would have been number 1 because number 1, we could have been number 1 actually, because IBIT's at 3.2 billion, and the biggest one is really only at basically 4.2 billion, I believe. So this is like massive inflows for IBIT. If it's not number 1, then at least like number 3. So there's huge amounts of inflows here, and it's competing with the big boys. And Fidelity, it would probably be like top 5 as well. So had we been counting from January 1st, had the SEC gotten their shit together and basically approved us at the beginning of the year, I think we would have actually been like number 2 and number 3, or number 3 and number 4 in terms of the big ETF inflows funds. So basically, but there's a huge gap between BlackRock and Fidelity against the other 7 spot ETFs. ARC21 shares and Bitwise are third and fourth among ETFs with 683.7 million and 663.6 million in accumulated flows. So BlackRock and Fidelity are literally like 4 or 5 times. Invesco, Galaxy, and Valkyrie are the other spot ETF issuers that have recorded over $100 million in inflow, while WisdomTree remains in last place with just 11.1 million. Some of the smaller ones may not survive, but Grayscale's strategy of basically waiting things out, I don't think is going to work against BlackRock and Fidelity. So basically, like, net flows into the top 10 spot Bitcoin ETFs stand at 1.5 trillion since the products first began trading. So the massive inflows, I think, have actually overtaken the outflows at this point. I think they did sometime last week, and that's why we're seeing some strong traction. But there is still, remember, the $1.4 billion potential sell-off of the Genesis stuff, and that's going to ride hard on us as well. But I don't think we'll go below 38, and we should recover very, very quickly. I expect BlackRock and Fidelity, the ETFs, to be probably like the number 3 and number 4 ETFs in terms of volume by the end of the year. And I think it's going to make crypto a lot more mainstream and make a lot more people comfortable with a prospect of crypto. And I do think this will slowly bring us up to the all-time high before the end of the year. So it's definitely coming. Of course, with this news, the SEC has clamped down on dealers. So they want to extend they want to extend market makers to be dealers as well. And of course, like, there was a split in the SEC with 2 against and 3 pro. Hester Pierce and the other commissioner did actually dissent, and they're saying that the SEC is being very, very arbitrary. While some of the pro commissioners saying these measures are common sense, absent an exemption or exception, if anyone trades in a manner consistent with de facto market making, it must register with the U.S. as a dealer. So the thing is, like, you're probably not too worried because dealers have to have control of $50 million to be liable to it. So it doesn't affect you, but for some of the market makers, this will actually affect them. The rules were actually adopted, so it will actually go into effect in a little while. The dealer framework is a functional analysis based on the securities trading activities undertaken by a person, not the type of security being used. So I think whales would actually be liable for this broker-dealer deal if they have more than $50 million in crypto. So basically, like, more regulation adopted 3-2 by the SEC. The SEC just voted 3-2 just now, with 2 Republicans dissenting, to define dealer to sweep securities, including what the SEC calls crypto asset securities, which is basically all cryptos, proprietary trading firms, and into dealer registration regulation. I'm not really sure if they'll actually bring this up to the courts, but we'll see. Dissension Commissioner Hester Pierce pointed out this eviscerates the dealer-trader distinction in the statute because they want to put trader in the bucket of dealers if they trade over $50 million. This is basically a regulation targeting whales. That's really what it is, targeting whales and fat cats. So I don't really know what to think about this. I think there should be a distinction between trader, dealer, and trader, but this is definitely the SEC trying to grab more power. Commissioner Ueda called the SEC's arbitrary and capricious for failure to study the impact on private funds, which are not excluded from the rule. So that's going to be a huge problem as well. I expect a court fight over this one. So basically, this is going to go to court, and this will probably get hashed out. I think the SEC is also going to lose here because they are being arbitrary and capricious. So, like, one of the commissioners said in support of the changings, there's a clear loophole here. Market participants with a significant share of market volume are engaging in activities like those performed by dealers without being registered as dealers. So they are, like, basically acting as controllers of the market. We've all seen it in crypto, and I do want that to stop, but I'm not really sure if giving the SEC more power and making people register more will actually be the right way to go about that. I am very suspicious of the SEC. Ethereum might actually be getting ready for a pump, as $1.2 billion in Ether has exited crypto exchange wallets in 3 weeks. That's an outflow. Outflows from exchanges are helpful to the market because that means people are keeping their funds in their private wallets and they can't really sell them as easily. And it's especially good for Ethereum because if you think about it, Ethereum has high fees to actually transfer. So if people are paying those fees to transfer out, they're probably not planning to transfer back in anytime soon. So we're probably going to get less selling. Of course, there is the $166 million that Genesis wants to sell, but that doesn't compare to the $1.2 billion that has just exited crypto wallets. So Ethereum might be geared for a pump, and maybe this will counteract the Bitcoin dump on the $1.4 billion that Bitcoin is probably going to sell off because of the Genesis stuff. So basically, like, a lot of Ethereum is leaving the exchanges. That's probably in preparation for the ETF launch. I do expect a run up to the Ethereum ETF launch. Binance has offered these snitch rewards on employees, and they pay up from up to $10,000 to $5 million for you to tell on your coworker who might actually be doing shady stuff. This is generally not what I like when I see offices doing this, because it fosters distrust in staff members. So basically, like, He is actually running the show now, who's the Binance co-founder and CZ's wife, by the way. CZ can't actually do anything with Binance, but his wife can. So the crypto exchange is offering $10,000 to $5 million for information that verifies corrupt employees. So they want to root out corrupt employees. They launched a $5 million bounty for information on potentially corrupt staff members after a spate of accusations alleged its crypto token listing could be front-run due to leaks. And obviously, we know that a lot of exchanges do actually front-run. We've seen it on Coinbase, Binance, and a lot of other places. So Binance isn't really alone in this. So he said Binance found users discovered blockchain data showing the exchange readying to receive the token. So there definitely has been exchange of information, and people do actually front run the listing because they know of it beforehand. So they're trying to root these guys out. But like I said, I think this fosters deep distrust within the employees themselves. Generally not a great move for a workplace. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.